But a client called in and said, hey, here's what I've got, right? I've got this old policy. I don't know what to do with it. I started off funding it. I haven't really looked at it in a while. Can you tell me what I got? And I said, yeah, absolutely. So I looked it up, started reading through his contract, and the company that he was with is he actually had a 7-year window where he could catch up his PUA options. So his scheduled PUA was right at $3,000 for the year. So this guy had not paid a PUA in 7 years, and he was able to dump over $20,000 directly into that policy. Best case scenario for this guy, number one, is he didn't need to start a new policy, right? And number two, his wife, who the policy was on, didn't have to go through any additional underwriting. And three is he was able to drop 20 grand from his checking into his policy. And now if you look at the rate of return internally on the PUAs in a policy, man, those are right around 4%, right? And so again, great option for this client. We didn't have to start a new policy. We were able to use what he had, and he was able to hit the ground running. The next point that I would make for you guys,
Cameron, real quick.
Yeah.
Just to clarify, somebody called in who's not a client, and they had an existing whole life policy. So instead of selling them a new one and you getting paid on a new policy, you showed him how he could turn the policy that he did have into an infinite banking policy.
Yeah.
Okay. Well, you sound surprised, but I imagine there's people not all IBC people are going to do that. I just wanted to point out that we're here to help people and to teach IBC.
Yeah.
And if you have something, if you need a new policy, we'll gladly help you. But if you don't, we can give you some instructions on how to maximize a policy that you do have.
Fausto, you know this, but most of the time, right, we're usually dialing people back on premiums, right? We've said this before, but a lot of people call, they're super excited, and they want to try to get every dollar into a policy. And so we're usually walking them back. But that would be an example of, right, hey, we'll look at what you guys have. If there's something that's a great fit for you, we'll tell you what to do, whether we need a new policy or not. So hopefully that helps. I was already thinking about the other feature that I was going to add in there is that, man, you look at what was available to this guy is he had 20 grand sitting in a checking account, probably earning zero, and he's able to dump it into the PUAs. If you look at the rate of return on PUAs, I ran an illustration before. I'm scared to tell you guys the numbers because I don't want you guys to call me up, right? But we get a great rate of return just on the PUAs. And if we just conservatively assume 4%, man, that's 4% tax-free. So now this guy has 20 grand earning 4% tax-free. And if you look at his tax bracket, that's like earning 6 to almost 7% just in some sort of investment account. So as your tax rates increase, PUA should be a place that you guys should be looking to stash cash because it's growing tax-free. Really, really good option for a place to put cash for you guys.
You want to see the entire episode? Click here. If you want to learn how investors use infinite banking to increase their returns and lower their taxes, click here. If you want to see if infinite banking is for you and you have some questions, hop on a discovery call with us and one of our coaches. The link for that will be in the description.